The Federal Reserve has created one of the greatest asset bubbles of all time. And this time, again, it's the housing market. In short, we learn absolutely nothing from the 2008 crisis. But let's get into the details.
You want to bet against the housing market?
So what happened back in 2008? Well, it was preceded by low interest rates after the dot-com bubble and the 9/11 attacks. We kept interest rates low in order to stimulate the economy. And then what did we do in 2008? We kept interest rates low. We decided we have this huge problem with the economy. Now let's drop interest rates down to zero. And we kept it there for 14 years. Actually 15 years. And keeping interest rates at zero makes it super relaxed and easy in order to invest, in order to buy a home. Because whenever money is cheap, people are more likely to borrow. And the mortgage rates at their lowest was like 3.5%. And if you think that the housing market is going to continue to go up 5-10% a year for the next couple of decades, then why wouldn't you take that bet? But then the Federal Reserve decided to start increasing interest rates over the last couple of years because they saw all the inflation that they created due to the easy monetary policy that we had, where we kept interest rates at zero for so long. And the worst part of this is that the Federal Reserve and the federal government let people borrow so much money. You could put 3.5% down on a government subsidized loan, which means that you're getting about 30 times leverage, which means that yes, in good times, you're going to earn 30 times more. But in bad times, you're going to lose 30 times more. So this cheap money made it very easy in order for people to borrow, take out loans in order to buy homes. And now that's starting to go away now that interest rates have gone up significantly. People were under the idea that home prices could only go up. I think it was a period of about 12 or 14 years before 2022 where there was only a single month between 2008 and 2022 where home prices went down. Spectacular. But obviously now home prices are starting to fall and people are getting worried. All of this was driven by this crazy speculation that home prices could only go up, and you had people that were buying places just to flip them and sell them at a higher price. You had people that were just in it for the short term, 3-5 years or so, in and out. Even though it's a 30-year mortgage, you're supposed to live there for 30 years. But people decided, you know what? The housing market can only go up. I'm going to be here 5 years, sell the house, make a profit, and leave. But I don't think it's going to work out. People were also under the assumption that interest rates would stay low forever because, if interest rates are low for 15 odd years, then why can't they be low for another 15 years and another 15 years? And then the Federal Reserve decided to jack up interest rates the quickest that we have seen since the 1990s.
Might be time to get a life jacket and get out.
I mean, seriously, I feel like I'm financially inside of you or something.
Okay.
I'm jacked.
I'm jacked to the tits!
And these higher mortgage rates ultimately mean lower home values. And that's a self-fulfilling cycle. Whenever the price of homes goes down, it's perceived as more risky by the banks, which is going to increase interest rates even more. So you're going to have high mortgage rates leading to lower prices leading to higher mortgage rates leading to lower prices, and so on and so on. And you have this on top of the increasing unemployment, especially for the people that could afford to buy a home over the last few years. You're seeing all these tech bros from Tesla, Meta, and everybody else getting laid off right now. And they were probably under the assumption that they would keep their job for, the next 5-10 years, move on to the next company. But now you have a hiring freeze at all these big tech companies, and where are they supposed to go? How are they supposed to pay their mortgage or their rent? This is going to end up in defaults, which again is going to increase interest rates more, feeding into the cycle of home values going down. And all of this is just to say that we had very lax lending standards over the past 15 years. Of course, we don't have the ninja loans like we used to, But allowing people to borrow with just 3.5% down is ridiculous, giving people almost 30 times leverage on an asset that's worth hundreds of thousands of dollars is incredibly dangerous. I understand the idea that home values can only go up and property is worth something, but at the same time, you have to have caution. And I think over the next probably 3-5 years, where interest rates continue to be high because the Federal Reserve has to work off all this inflation that they created over the past 15 years, home values are going to continue to decline. And maybe for the people that ended up saving some cash, we could have some good opportunities. I'm definitely saving my cash right now. But yeah, that's the housing bubble for you. Thanks for tuning in, and I'll catch you in the next video.